Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 8th, 2025, we're focusing on Intel Corporation, ticker Intel, which has been making headlines due to some unexpected political drama. Just yesterday, news broke that President Donald Trump called for the resignation of Intel's new CEO, Lip-Bu Tan. This sent immediate shockwaves, with Intel shares shedding approximately 3.1% to close at $19.77 on August 7th. Market analysts currently have a hold consensus rating on Intel, with an average price target of $22.42 for the next year, indicating a potential 13.4% upside from that $19.77 close. However, individual price targets vary wildly, from a low of $14 to a high of $29. Now, let's overlay this news with the raw price action to see how the market has truly reacted. We begin our analysis by looking at the daily chart for Intel, showing the broader context over the past year and a half. As you can see, the long-term trend for Intel has been predominantly bearish since March 2024, when it traded around the $40 to $44 mark. We observed a significant breakdown in April 2024, dropping below $35, followed by consolidation in the $30 to $32 range through May and June. A dramatic event unfolded in early August 2024, marked by an immense sell-off, plummeting the stock from around $30 to the low $20s, accompanied by exceptionally high volume. This earlier plunge was likely also triggered by significant negative news, possibly related to past operational or financial updates, establishing a new, lower trading range. Fast forward to July 24, 2025, Intel reported its second quarter 2025 financial results, and the market reaction was clearly negative. The daily candle for that day showed a notable decline. To get a clearer picture of this impact, let's switch to the 1-hour chart, focusing specifically on the period around that earnings announcement. Here on the 1-hour chart, zooming in on July 24, 2025, we can clearly see the sharp sell-off that occurred. The stock dropped significantly from around $23.50 earlier in the day to below $22.70 by the close of the daily session, with an increase in trading volume. This intraday volatility highlights how quickly fundamental news can translate into steep price movements as traders reacted to the Q2 2025 results. Returning to our daily chart, observe the price action leading into yesterday, August 7, 2025. After the Q2 earnings hit, Intel had settled into a range primarily between $19.50 and $20.50 during early August. Then, yesterday, the stock experienced another sharp decline, closing at $19.77. This drop aligns perfectly with the news of President Trump's call for the CEO's resignation that we discussed earlier. To witness the immediate market's knee-jerk reaction to this specific news, let's examine the 15-minute chart for August 7th. Focusing on the 15-minute interval where the news likely hit, we see a dramatic candle from around 11:37 Universal Time Coordinated, where the price dropped sharply from $20.46 to $19.60. This swift and significant move underscores the market's initial negative sentiment and uncertainty surrounding Intel's leadership. Following this initial plunge, the stock attempted to stabilize, mostly consolidating in the $19.70 to $19.80 range for the remainder of the trading day. Now, for the most intriguing development, let's revert to the daily chart and look at the incomplete candle for today, August 8, 2025, as of our analysis time. Despite the negative news from yesterday, Intel has shown remarkable resilience, opening at $19.10 and rallying significantly. Currently, as we speak, the stock is trading up over 7% today, with the price pushing towards $20.49. This strong positive reversal, occurring on relatively high volume, suggests that the market may be viewing the CEO controversy as either overblown or already priced in. It could also signal strong buying interest at these lower price levels, indicating a buy-the-dip mentality among some investors. Let's identify key price levels for Intel. Immediate support exists around $19.50 to $19.70, a level that held firm during yesterday's initial sell-off and served as a base for today's rebound. A more substantial support zone lies around $18 to $18.50, representing the lows seen back in April 2025. On the upside, immediate resistance can be found around $20.40 to $20.50, which is where today's impressive bounce is currently testing. Further resistance levels are at $21.50, observed multiple times in May and January 2025, and a stronger barrier around $22.50 to $23, which capped rallies in late 2024 and mid-2025. The analyst average price target of $22.42 also acts as a psychological resistance point, while the high target of $29 suggests significant long-term potential if bullish sentiment prevails. So, what are the reasons to be bullish or bearish on Intel? Reasons for a bullish outlook include today's impressive 7% rebound on strong volume, suggesting that the market has either absorbed or dismissed the recent negative news. The current price also sits well below the average analyst target, offering potential upside. Furthermore, any positive resolution to the CEO's situation or stronger than expected future earnings could trigger a more sustained rally. On the bearish side, the stock is still in a long-term downtrend from its March 2024 highs. The analyst consensus remains a hold, indicating a lack of strong conviction for a rapid ascent. Lingering uncertainty over leadership, combined with ongoing competition in the semiconductor sector, could cap significant gains. A break below the $19.50 immediate support could quickly lead to a retest of the $18 to $18.50 levels, and possibly even the analyst low of $14 if sentiment turns severely negative. For traders looking to enter or exit positions, monitoring volume is crucial. Today's high volume accompanying the price surge is a positive sign for short-term bullish momentum. Watch for retests of key support levels. If they hold, it reinforces the bullish case. Conversely, a breakdown on high volume would confirm bearish continuation. Upcoming company announcements or further political developments regarding Intel's leadership will be significant catalysts. Keep an eye on the broader semiconductor industry performance, as industry trends often influence individual stocks like Intel. The market's reaction to future news will indicate whether this bounce is a true reversal or just a dead cat bounce within a larger downtrend. To recap, the immediate price levels to watch for Intel are the $19.50 support and the $20.50 resistance. A sustained break above $20.50 could open the door towards the next resistance at $21.50 and potentially the analyst average target of $22.42. The likelihood of hitting $22.42 is moderate, perhaps 60%, if today's positive momentum continues and no further negative news emerges. However, a fall below $19.50 would likely send Intel back to test $18 to $18.50, which has a 40% probability if the buy the dip sentiment fades. Long term, achieving the $29 analyst high target would require a fundamental shift in company prospects and a resolution to ongoing external pressures. The crucial conditions reinforcing a bullish move would be strong follow-through buying tomorrow, positive CEO news, or a change in political rhetoric and favorable industry trends. Conversely, renewed political pressure or disappointing news could quickly erase today's gains, making the $14 analyst low a more likely outcome. Always remember to manage your risk and stay informed on both technical patterns and fundamental catalysts. Thank you for watching Explain the Charts, and we'll see you in the next one.